Welcome back to Investing Talk Podcast. Today, we're diving deep into a question that seems to be on a lot of minds. Is now a good time to buy Bitdeer Technologies Group? This is the deep dive, where we take all the sources, all the data, and really try to boil it down, extract those key insights to help you get well-informed quickly and thoroughly. We've got some really interesting material today, definitely a few aha moments in there. And hey, if you're finding these deep dives helpful, please do remember to subscribe, like, maybe leave us a comment. Your support genuinely helps us keep doing these. Also, if there's a specific company you want us to tackle next, just drop it in comments below.
Absolutely. We've gathered quite a range of insights on Bitdeer Technologies Group for this one. We're looking at everything from their financials, which are interesting to say the least, right through to market sentiment. The goal really is to help unpack what's truly going on with the stock.
Great. So let's kick things off. Before we get into the weeds of financials and valuation, maybe just set the scene. What exactly does Bitdeer Technologies Group do?
Right. So they operate mainly in, well, two really hot areas right now: blockchain and high-performance computing, or HPC. But they're not just a crypto miner, though that's a big part. They do things like hash rate sharing.
Hash rate sharing, what's that?
It's basically where individuals or maybe smaller groups can rent some of Bitdeer's mining power. So you don't need the huge upfront cost of buying all the gear yourself.
Ah, okay. Like cloud mining, sort of.
Exactly, yeah.
Yeah,
It
right.
broadens their income beyond just mining crypto for themselves.
Hmm.
And maybe even more importantly for the future, they're heavily investing in AI and HPC data center development.
Okay, so a mix of crypto and this broader high-performance computing, potentially AI-focused infrastructure. Interesting.
It's definitely a diversified approach, which is key to understanding their whole story, I think.
Right, but then we look at the fundamentals, and like you said, it gets interesting. You see this huge projected revenue growth. What was it, 45% for FY 2025?
That's the number, yeah. Impressive growth forecast.
But then you contrast that with a net income loss of, what, over $190 million in the last 12 months? How does that square up? Is it just massive spending, or is something else going on?
Well, that's the million-dollar question, isn't it? Or I guess the $190 million question here.
Yeah.
That negative income, yeah, it mainly reflects just how capital-intensive this business is. They're pouring money into expanding their own mining operations, building these huge data centers for HPC, and potentially AI.
So it's investment, not necessarily inefficiency.
Largely investment, yes. Significant upfront spending. Think of it as CapEx. Now, our sources didn't give super specific cash flow numbers, but the sheer scale of their expansion plan suggests, the potential for better cash flow later once these investments start paying off. What's really fascinating, though, is despite bleeding cash right now, analysts are generally pretty bullish. The consensus rating is actually a strong buy.
Wow. Okay, so analysts see past the current losses. They're betting on that future payoff from AI and HPC.
It certainly looks that way. They seem to believe Bitdeer is positioning itself strategically in these massive growth sectors, and that today's losses are sort of the cost of entry for potentially dominating later.
A long game, then. Makes sense. And part of that game you mentioned is expanding self-mining and these new mining rigs, SealMiner A3 and A4. What's special about them?
Right, the SealMiner A3 and A4, they're being touted as significantly more energy efficient and more powerful computationally. In crypto mining, efficiency is everything, right? Lower power consumption, higher hash rate that directly impacts your profit margins, especially when competition is fierce.
So better tech means potentially better profits down the line.
Exactly. And by doing more self-mining with these efficient rigs, they keep more of the upside for themselves instead of just selling the hardware or renting out the hash rate, more control.
Okay, so we've got this picture. Ambitious growth, heavy investment, betting on future tech. But still those current losses. How on earth do you value a company like this? Where do you even start?
Yeah, that's definitely a challenge for investors here. The standard playbook gets tricky. Because of the negative earnings, your classic price to earnings, or PE ratio, is meaningless. It's just not applicable.
Right, no E in PE. So what else do we look at?
Well, you look at other things. Unfortunately, the sources we pulled didn't provide specific price to sales or price to book ratios, which would have been helpful. But just to give you a sense of scale, their market cap is around $2.6 billion, and their revenue over the last 12 months was about $300 million. So, it gives you context for their size.
Okay, 2.6 billion market cap, 300 million in revenue. Still doesn't tell us if it's cheap or expensive, but gives us the scale. What about the stock price itself? How has it been behaving?
Volatile, very volatile. It's trading around $13 right now. But look at the 52-week range. It's been as low as $5.40 and as high as almost 27 cents.
Wow, that's a huge swing.
Huge. And that volatility is captured by its beta, which is 2.22.
Explain beta again quickly.
Sure. Beta measures how much a stock moves relative to the overall market. A beta of 1 means it moves with the market. Above 1 means it moves more. So 2.22 means Bitdeer is significantly more volatile, more sensitive to market swings, both up and down.
So bigger potential gains, but also bigger potential losses, not for the faint of heart.
Definitely not. Interestingly, the technical indicators are a bit quiet right now. The 50-day moving average is $12.94. The 200-day is $12.88, both super close to the current price. And the RSI, the Relative Strength Index, is around 46, which is considered neutral.
So the charts look kind of calm, but the actual price history is wild.
Exactly. It's like the technicals are showing this moment of neutrality, maybe the market holding its breath, but the underlying character of the stock is defined by those big swings. It suggests any move could be quite sharp when it comes.
Okay, this is where it gets really interesting, I think. Beyond the numbers, what's driving the news? What's shaping how people feel about Bitdeer and what's coming up that could shake things up?
Well, on the analyst front, there's a bit of a split, which is always interesting to watch. You've got Benchmark reiterating their buy rating, sticking with a $24 price target.
Pretty optimistic.
Very. But then you have B. Riley, who actually trimmed their target slightly from $18 down to $17, though they still kept a buy rating as well.
So both still positive overall, but one's pulling back a bit. Why the difference, do you think?
It often comes down to different assumptions. Benchmark might be weighing those long-term AI/HPC data center contracts more heavily, seeing bigger future potential. B. Riley might be a bit more cautious about, say, near-term crypto prices or maybe the speed at which those new miners ramp up production. It really highlights how even the pros can see the same company differently.
Yeah.
It forces you as an investor to think about which narrative you find more convincing.
Fair point. And what about the broader market mood? You mentioned analysts are generally bullish, but what's the overall vibe?
That's another interesting contrast. While analysts have that strong buy consensus, the wider market sentiment, measured by things like the Fear and Greed Index, is currently showing fear. It was at 39 when we looked.
Fear in the market, but analysts saying buy this volatile stock. That's quite a disconnect.
It is. It could suggest that maybe institutional investors, who often drive those analyst ratings with their deeper research, are seeing something the broader retail market, perhaps spooked by general economic fears, is missing right now. Maybe they see the long-term value in Bitdeer's unique infrastructure.
Okay, so a lot of conflicting signals there. What are the key things we should actually watch for? What are the upcoming events, the catalysts, that could push the stock one way or the other?
There are definitely a few key dates and potential events. First up, their next earnings report. That's expected around August 11th, 2025. That'll be huge.
Right, to see if they're making any headway on profitability.
Exactly. Second, keep an eye out for more concrete news on those SealMiner E3 and A4 rigs. A successful launch and good performance data could be a big boost.
And the third?
The third is potential partnerships, specifically finding a development partner for their planned AI and HPC sites in the U.S. Landing a big-name partner there would be major validation.
Got it. Earnings, new miners, potential U.S. partnership. Okay, let's try and pull this all together. We've talked operations, financials, valuation quirks, sentiment, catalysts. For someone thinking about Bitdeer, what are the big risks and what's the bottom line here?
Okay, risks first. On the stock-specific side, we've hammered this point, but it bears repeating. The current lack of profitability and the high volatility. You need to be comfortable with that.
Absolutely. What about bigger picture risks?
Sector-wise, you've got the ever-present risk of regulatory changes in crypto that can shift the landscape overnight. And in HPC, it's just incredibly competitive. Technology moves fast.
In the economy in general.
Yeah, macroeconomic risks are always there, especially for growth stocks like this that aren't profitable yet. An economic downturn could really hit investor confidence in funding for these kinds of companies.
Yeah.
So weighing all that, the growth potential, the analyst optimism against the financial concerns and the volatility, our sources synthesize this into an overall rating of 6 out of 10.
6 out of 10. So kind of cautiously optimistic. Reflects that balance of good and bad.
Exactly. It acknowledges the potential but doesn't ignore the very real risks. And based on that, for someone considering getting in, the analysis suggested looking at an entry price maybe around the $11 to $12 range.
So a bit below the current $13, offering a small buffer.
Precisely. a strategic entry point to potentially mitigate some of that short-term downside risk.
Okay, and who is the stock really for? Is it a quick trade or a long-term hold?
Given everything, it seems much more suited for long-term investors. People who believe in the AI HPC growth story see the value in Bitdeer's infrastructure build-out and are willing to ride out the current volatility and wait for profitability.
And short-term traders?
Short-term traders really need to be careful here. That high volatility makes timing critical and difficult. If you are trading at short term, the sources suggested thinking about a stop loss maybe around $10 to protect capital and perhaps looking to take profits somewhere near $15 or $16. But again, that's highly dependent on individual risk tolerance.
That makes sense. So this deep dive really underscores that central tension for Bitdeer, doesn't it? Massive growth potential in really exciting areas, but weighed against those profitability hurdles right now and that significant volatility.
Absolutely. Understanding that trade-off is crucial.
So thinking bigger picture for a moment, what does Bitdeer tell us about investing in these kinds of emerging high-growth sectors?
I think Bitdeer is a fantastic case study, actually. It really highlights the core dilemma. You've got these potentially game-changing technologies, massive addressable markets like AI infrastructure, but they require enormous upfront investment. So it forces you as an investor to ask, when does that future promise become compelling enough to outweigh the very real struggles and losses happening today? And crucially, how much risk, how much uncertainty are you personally willing to stomach for a shot at that future reward? It's a fundamental question in growth investing.
That's a great final thought. When does potential outweigh the present pain? Something for everyone to consider. Remember, folks, getting well-informed is an ongoing process. This deep dive is one piece of the puzzle. Keep digging, keep asking questions. Thanks for joining us on Investing Talk podcast, and we'll catch you on the next deep dive.